and started from the small grind, turned it up major. I remember all the hard times, that's what made me greater. Done departed from the haters, got no time, see you later. Always finish what I started, that's what I call major. No, I'm major.
Let's save together.
Let's save together. Number 6.
Episode 6 already.
Episode 6. Yeah, crazy,
wow,
bro.
Man, time is flying.
Crazy weekend for sure, man.
Yeah, those first couple episodes are starting to get some views, right? Starting to pick up.
Yield Max and Granite Shares, honestly, is like, I think, shout out to both of them because they're kind of leading the charge on that. But I think a lot of people are so interested in the products, even beyond us, that, they're looking it up. So that's pretty cool,
Yeah. So, I guess we'll just dive straight in, man, on the Trump failed assassination attempt this weekend.
Look, we would have probably never wore Trump hats on this podcast ever.
Yeah, because we didn't want to be political, but it's one of those things, If the man's willing to get shot for the country, I should be willing to wear a hat and tell everybody that I'm voting for him.
And I don't agree with everything that he does or he says, but it's like, if you had to pick, two people, who do you want as president? Everybody says it, my life was better when Trump was in office.
Instead of Butter Joe?
Yeah, instead of Sleepy Joe, So, shit.
He's very forgetful. Right?
I think all the YouTube people I see online that are like, man, they're afraid to say anything or they just keep it to a minimal, because it's who knows, nobody wants to speak their mind, but it's it's getting more and more evident that dude, if you don't like Trump, you don't have to like everything, but hey, I think it's clearly evident who's supposed to be in there and who's not.
Yeah. Trump.
So we got the Trump hats on.
Trump's a diehard. He's definitely a badass, and we just bring it up because we want to say political violence is unacceptable in this country. This is a democracy, so people should be allowed to vote for who they want. If you don't agree, that's okay. You'll have your time in the ballot box. So, with that being said, we're going to roll over to the actual reason we have episode 6. Which
the real reason.
Just options. We're going to explain, pretty much give an intro to options.
So really, guys, this is why we've been here to start. We've been talking about companies. We're kind of getting ourselves transitioned into doing this and, putting ourselves on camera, giving game. But this is we've been talking all day today. This is where we really see ourselves giving people turning that little bit of something into that big pot.
Oh, yeah. Because earning season is coming. So we're definitely going to make some good plays live during the episodes. And this is going to be really cool.
The Discord is officially under creation, meaning I sent it in to someone to create all the channels, to organize it, have it all set up with certain bots in there. So the first 25 people we're letting in for free for a life. You guys are going to be the for lifers.
Yep.
Just come on and join in.
Yep, join in. The first 25 is free, and then the next 75 we're going to charge $24.99 for Discord.
We'll kind of figure everything else out from there, But that's just kind of how we're on it. Hey, if you don't got $25 to invest and see exactly what we're doing, it's probably not for you. And if it's not for you, then guess what? You can enjoy this podcast for free. For free. It's all for you guys. We're never going to charge you for that to save time or money with us. But if you want to really get in and really make some money, we're never going to charge you $100, $500. There's people out there the Wall Street.
There's
people out there the Wall Street Trapper that are charging people $500. Not to say it doesn't have value.
Socrates is charging $109. I think Jay Dunn and them are charging $150 a month. There's a lot of people who charge $100, $200.
Not to say there's not value. I'm sure you guys got great value.
There's plenty of value in those Discords and stuff, but we're just coming in at a more affordable price point just to give the beginners, room to make their
less
money.
Risk, more reward.
Yes, absolutely.
That's really where we're at.
So let's start it up. What is a stock option? All right. So a stock option gives an investor the right, but not the obligation, to buy or sell a stock at an agreed upon price and end date, right? So there are two types of contracts. You have call options and you have put options, right? Stock option contracts are a contract that gives you the right or obligation to buy 100 shares at a specified price. All right. So if you bought 100 shares of Apple, I think Apple's $230 a share. If you bought 100 shares of Apple straight up, probably cost you around $23,000. But you can buy a futuristic contract, let's say the 240 calls for January or the 240 calls for September. You can get those at a fraction of the price, which you just pay a little premium and you get in there. And you essentially get the move of 100 shares, but you don't have to own the 100 shares. You can buy the contract. right? So what is a call contract, right? A call contract is a bet that you assume that the stock is going to go up. And a put contract is a contract where you assume that the contract is going to go down. Well, the stock price is going to go down. So calls go up, puts go down. It's that simple. So now, Steve, how much experience do you have with stock options?
Definitely not as much as you. I came from like throwing events most of my teens and like 20s, and when the pandemic hit, Tony was nice enough here. After years of telling me to invest, he got me to start trading options. So every day we would talk on the phone, and I probably have like a solid year and a half from me being $1 million trader in 2020. Us taking a 40 grand investment I had, turning it into close to 90, and then me literally losing it all. And that's just the culmination of, one of the things that got us even here to this point.
Yeah,
so
contract.
like that's
I mean, option contracts are phenomenal.
The learning through the lessons. Yep.
If you know how to buy and sell contracts, or you actually know what you're doing and stuff, contracts can be a very lucrative business.
And they say a lot of people who actually lose and really go down are the ones who've, like, chances are if you're all the way up here on options, you've been down there.
Yes,
it's nobody really that's just like went up and not really took
There's
big
just
hits.
no straight shoot up.
Yeah.
I mean, unless you have a mentor for options or something. Hey,
yeah,
like in options, you can really turn over some quick money. Like you can take advantage of deep value, discounted companies.
Right.
You can take advantage of discounted companies that are really down. You can either buy the shares or you can buy some contracts at a fraction of the price. And when they go up, it's almost like a multiplier.
Yep. So I have probably even us doing options now, but how much experience do you have in options? Like, when's the first time you really learned about options? What type of programs or systems did you use to learn? And what kind of real life experience did you apply that knowledge to?
So the first time I had an interest in options was, I think it was like my last year of high school.
Okay.
Last year of high school. This is probably what, 09? A long time ago. I had an interest with options because I'm just a numbers guy. I love numbers. Anyone that knows me, grew up with me, came across me, they know I'm all about numbers. And I was very curious about how options chains work and like what all those numbers mean. And, I took an interest in it. So when I ended up making it to Temple back in 2011, I decided like, hey, I love numbers. I'm not going to do accounting. I'm going to major in finance. All right, I'm going to major in finance and I'm going to focus on derivatives. I'm like, let me specialize in derivatives while I'm in college. So I've been trading options now for about almost 10 years. So I've made a lot of money on options.
You said you used to do some in college where you were like, it was like a practice simulation.
Oh, yeah.
And you graduated X amount. Like, I think people would be curious to hear that. That's that stuff people would probably want to hear.
I mean, we have really good teachers, like at Temple University, Fox Business School. If you're familiar with Philadelphia, it's a really good business school. You have,
yeah, right. Go ahead.
Yeah, like you have Temple, you have.
No, there was a certain program in there that you said you like people would like virtually trade options, and then like people were ranked a certain way. Like like,
no,
that's what I'm trying to get
We had
at.
like a ranking system. Yeah, like we had a ranking system.
I'm trying to
like,
get to the juice. Let me
hear
that
pretty
juice.
much a program where people traded short-term and long-term options and stuff, and we have rankings within the class and stuff. This was the type of class where it was just a lot of people who were in this class were either actuaries, either investment managers, investment bankers. Like this is
like graduating too big.
Yeah.
So at the end of the day, how many people were in the class? Where did you graduate at?
Oh, I mean, with my particular class, there was about 25 people in my derivatives class because these classes are small. They're like specializations. So people stood away from it. Like our teachers were from Vanguard and from Goldman Sachs.
Okay.
So I mean, pretty much like the top 3 people that were trading options was it was one of the kids that was running the Owl Fund, like another very smart Asian kid, like very, 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 very intelligent, and then it was me. So we were like top 3 in our class when it came to trading options, and like we were really doing our thing.
All right, so that's a pretty good, solid background history because obviously, like you're here with a lot of the knowledge of the options.
Yeah.
So
I mean,
like
let's say this, like let's talk about like our trades. How like what's the biggest option trade you had when conducting business with me? when making trades with me? What's the biggest option trade we made?
We put like 40 grand on a 1 week contract on Tesla, or maybe we put like 70 grand. Honestly,
No,
60
I think
or something.
I think our best trade was.
Oh, the best? You said the biggest. There's a difference.
all
The
right,
biggest
excuse
or
me,
the
best
best
trades. What was the best trade? Was it the Snapchat trade?
The Snapchat, yeah.
Like I think we bet like 28 grand and we made like something like $120,000.
No.
Yeah.
Nah, because my portfolio was never there. It was like 15. We turned it into like 60 or like 70. And then we put like 70 something on a 1 week. And then we got clipped.
Okay.
It was a long time ago.
Well, yeah.
But-
I'm pretty sure we had $100,000 trade, but nonetheless, we've had $40,000, $50,000, $60,000 months in options and trading
Yeah.
options.
Oh, I
We're
mean,
off-
I've been $1 million trader during the pandemic. You're probably
Yeah.
a multi-million dollar trader at this point. So there's a lot of knowledge that we have from trading options, and why we're really getting down to this is like we're gonna break it down, the options, in a way like, hey, we're not a whole course that you're gonna sit here and learn a bunch of stuff. Like you're gonna learn it in a way that's very like how would you say? Like we're just gonna break it down.
I mean, I'm gonna literally give you the do's and the don'ts because a lot of people like to trade options. They have no idea what the hell is going on out there. A lot of them get caught by Theta. So short-term contracts and stuff, people like to trade short-term contracts because they can make you a lot of money, right? But the issue is with short-term contracts is that the Theta is real high. So Theta is essentially the amount of money that's coming off the contract every day, right? Because these contracts are comprised of two components. You have intrinsic value and you have time premium. Intrinsic value is the true value of the contract, and the time premium is the amount of time that's left on the contract. So when you have short-term contracts, you have less time premium. When you have long-term contracts, you have more time premium. So I always like to say people should focus on mid to long-term contracts, preferably long-term leaps. A lot safer. Might be a little more expensive, but you'll be safe.
Because the less time.
Because short-term contracts, we've lost what, 10, 20, 30, $40,000 on short-term contracts. If not hundreds of thousands of dollars on short-term contracts. Because even if you are really good at what you do, to bet something very short-term, like a week or two, and you have to expect it to go you expect it to go a certain way and it doesn't, then guess what? You're kind of asked out on all your money.
Unless you're in the money and then you're putting up a lot of money.
Unless you have a lot of intrinsic value, right? So I always tell people, hey, if you're not too familiar with options, go about 3 to 6 months out, grab a nice contract and, focus on it from there. But if you have some money to play with, take some long-term leaps. Long-term leaps are option contracts that are about 12 months out, 12 months or more. That's the defined definition, all right? So
I'm an average person and I want to do options. And I see, maybe I think it's going to get to this price and I just buy an option. I'm looking at all these things like the Greeks. I'm like, I don't really know what any of this stuff is. Like, I don't know what the Greeks are. I don't know like how I should be buying an option. You kind of just gave people an explanation, but really just kind of break that down for people and in a way they could comprehend.
Well, I mean, there's you have the main Greeks, right? Delta, Gamma, Theta, and Vega, right? They each have their own sway to it, right? So the delta determines how much an option price will change for every dollar that changes in price. And then the gamma indicates how much delta will change when the underlying asset changes. Right? So it's like, what the hell does that even mean?
Yeah, break them down.
What does that even mean, right?
Break them down how you see it.
So like if you're looking at the Greeks, right? Because if you're buying option contracts, the Greeks would be at the bottom of the contract, right? And they'll explain everything. So the delta is pretty much the amount of money that your current option contract is going to go up per dollar. And the gamma is how much money is going to be added to the delta as the next dollar goes up, right? So delta and gamma kind of go hand in hand. Delta is how much is going to go up per dollar, and the gamma is how much is going to go up on the next dollar. So let's say if the delta is 60 cents and the gamma is 15 cents, on the first dollar that it goes up, you'll make 60 cents on that dollar, all right? On the next dollar, you'll make 75 cents because the delta and gamma add for the next buck. So probably have to watch that a few times to get it, but
yeah,
that's essentially what it is.
Even one of the first questions I had before you go on the rest of them like when I first did options, which I'm sure some other people have too, is like when you see something is $7, but it's really not $7. Like
Sure.
you see a $7 contract, but you're not actually paying $7 for it.
Oh, yeah, because, I mean, you have to understand that the option contracts are 100 shares, right?
Yeah.
So if you go in, right, and you see a contract like, oh, this contract is 60 cents, that means you're going to pay $60 for it. The contract says, hey, it costs $2 to enter, that means you're going to pay $200 for the contract entry.
Just little tidbits. I was like, damn, I didn't know that.
Yeah,
but
just little things, because I know you like to get all into the little intricacies because you want the beginners to follow up. So,
Yeah.
like, I get that. I get that.
But yeah, go ahead the rest of the Greeks. I didn't mean to cut you off.
No, it's fine. So, and then, like, you have the Theta. The Theta is something that, is on a long-term contract.
That Theta be having a cricket.
Yeah, on the long-term contract, your Theta is going to be extremely low. It's probably going to be a penny or two, right?
So what is the
0.01,
Theta? What is the Theta?
0.02. So the Theta measures the daily drop in option price as it nears expiration, as long as everything else remains the same, right? So essentially, the Theta is money that's going to be taken from you. That's money that the seller of the contract is going to collect. So that's money that you're going to lose every day as the buyer of the contract.
That's why the closer the time, the higher the Theta is going to
Yeah.
be. The farther out, we're good because it ain't really going to go out that much.
Like, I like to talk to my buddies and tell them all the time, like, don't be a Theta thought. Like, you don't want to be there. That short-term contract is going to scorch you.
and that's why, guys,
It's so bad. Short-term contracts are so bad if you don't know what's going on.
these invest ethics that we have, like if you go on our Instagram, like you see in our, on our website, like these things were the culmination of years of trials of us getting smacked to really be like this earning season,
millions and millions of dollars of trades.
Even
Millions
us.
each.
This is going
Each
to be
of
our
us.
first time this earning season next week, like us actually putting these principles into play and following each one along the way. So like I'm so excited to do this and to start
my
a Discord.
God,
Like
people,
hope-
people are gonna make so much
I really
cash.
hope.
Like this week is gonna be really cool.
Yep.
We're
gonna show all the
for all
losses
you
and the
long-term
wins, and the-
leapers, which I
Yep.
think there's a lot. I would definitely look at some $10 calls on Riot for January 2026. Those
Yeah.
are awesome.
Go on the rest of the
Yeah,
Greeks.
yeah.
We're gonna
drop
into
that in there.
Yeah, that
And
was
then-
crazy though.
yeah,
I already
yeah.
know. We're gonna really get on all that later
and then,
on.
The Vega, right? The Vega helps investors understand how sensitive our option is to major price changes. So, I mean, honestly, like the three that you really want to pay attention to is the Delta, the Gamma, and the Theta. We could talk about the Rho. The Rho just measures the sensitivity of our option to interest rate changes. Interest rate changes are, kind of nil right now. So, I mean, like it'll be there, but it's not really active. Delta, Gamma, Theta, Vega, and Rho. But the Delta and the Gamma is really what you want to pay attention to, and the Theta. Those short-term contracts have a lot of Theta, so you will lose money hand over fist unless it moves in a direction that you need the stock to move in.
And
Which, if you are betting short-term contracts, do yourself a favor and stay away from those out-of-the-money contracts unless you are absolutely certain that stock is going to go where you need it to go.
And be comfortable losing what you're putting out. Like
Yeah, I mean,
you have
short-term
to,
contracts, you have a high probability of losing. Can you make money hand over fist, 500%, 600%? Yeah, we've been there.
There was somebody in Reddit, like when the past GameStop things were just going on, he was putting BlackBerry. He was putting remember that was like $7-8 calls and it was like $4. He put like 40 grand.
Yeah. And
on like a
and
one-way
what was the
contract.
first thing I told you?
Them shits are done.
The first thing I told you, when I saw him buying BlackBerry calls $2 out the money, what was BlackBerry trading at like $5? He was
It was like
expecting
$4.50, $4.60 or something.
Like he was expecting BlackBerry to move up like 50% in a week. It's like, all right, like you can love meme stocks and you can dream, but don't throw your money in the garbage.
Yeah.
These guys are
Don't buy the hype, guys. Like do your own research. Like do your own research.
Like if you're
Seriously.
gonna do short-term options, try to get a little in the money.
And I think
It'll save you a little bit.
And I think this breaks it down. Like I think we gave people a solid course, and of course we're gonna link Investopedia. I'm gonna get all the
Investopedia has everything for you.
We're gonna get all the
Everything.
sources for everything we talked about, so that you guys can do your own kind of research. But I think this is a great time to introduce what we're gonna be preaching, and the type of trades that we're gonna be doing is not just calls and puts, but we're gonna be doing call debit spreads. And what would you say? Is it a put debit spread, or is it still called a call debit
all
spread.
right. So
It's
there's called debit spreads, which essentially other people refer to them as bull call spreads. So it's kind of interchangeable terms, call debit, bull call spreads. Essentially when you buy a call and the money, and then you sell it out of the money call, and you collect the premium.
So what's the
up
put
top.
side called? It's just the same
It's
thing?
called put credit.
Put credit, okay.
Yeah.
So explain.
So call debit, put credit.
So explain that, like, break that down. Like, if I'm going to buy a call, then I'm selling another one. So, like,
Well,
what am I
mean,
doing exactly?
I mean, for example,
What's the benefit and what's the cons?
I mean, the benefit of the call debit spread is that you get into a position at a discounted price, right? So, for example, let's say you're buying $20 calls on XYZ company, right? And let's say the $20 calls are going for $4, right? And you can get them for $4, right? And for every $4 that it goes up, you double up your money, right? So let's say.
Wait, break that down. So it's a $4 gap. So, like, explain it just so, like, because I'm like a little familiar, but I know somebody probably hearing that is like, what does that mean exactly?
Okay, so if you're purchasing a $20 call of XYZ company and the call price is $4, that means your break even price is $24.
Okay.
So for every $4 that you go up because you invested $4, you'll make 100%. So if the stock goes from 24 to 28, you'll make 100%. Right? But you're buying the call contract for $4. Now, let's dial it back a little bit. Let's say the $20 call is $4. Now you have a $30 call that is $2, right? Those out of the money calls sometimes are still pricey during high volatility seasons, right? What you can essentially do is you can buy the $20 call for $4 and you can sell the $30 call for $2. And you can get a $10 spread. The $30 call minus the $20 call is a $10 spread. You can get in there for $2. Now, if the stock goes up to $28, instead of you just doubling up your money, since you bought the $20 and sold the $30, you'll make 300% on your money because you pay $2 to get in. So it's 22, 24, 26, 28. So that's a 300% return instead of getting 100% return.
Now, with the regular, if you would have just bought the $20 call now, you would have made more money, correct? If you would have just bought that, like, you wouldn't have did the call debit. You wouldn't have did, like, you would have probably made more.
No, Steve, you're confused. I just explained it. Like, you're going to make less money.
No, I'm saying if you would have did it the other way, that's what I'm saying.
I mean,
that's all I'm saying.
Well, if you're just buying naked calls,
yeah, you would
like,
have made more. So that's like
no. If you buy naked calls, you're gonna make less money. Like, you're gonna make less money when you buy naked calls. Like, when you buy call debit spreads, you're gonna make more money.
Oh, all right.
Yeah, like, if you buy naked, you're not gonna make as much money as you would with a call debit spread. Like, you know that. Like, call debit spreads, you'll make more money. More money, less risk, lower entry. Naked calls, more risk, higher premiums. So when people learn about call debit spreads, a lot of times there's a lot of people who trade options and they have no idea about call debit spreads. Like, they don't know anything about the functionality of it or anything.
Yeah, I'm still kind of new too. That's why it's like I don't know as much either.
Yeah, like, don't confuse yourself.
Yeah.
Naked calls, you make less money. Call debit spreads, you make more money. Smaller entry, cheaper prices.
So there's no benefits of regular calls. There's zero benefits.
I'm not saying that. Everything varies. Everything varies. But you're going to make more money on call debit spreads unless there's a massive explosion in the stock. Which, let's say if the stock explodes to 32, right? From 20 to 32, you're going to make 200% on the naked call, but you're going to make 400% on the call debit spread. So you're always going to make more money on the call debit spread unless the stock goes up 50, 60%. Right? Because call debit spreads caps your gains. But it's like...
Well, that's why I said that like that, because I just realized that it capped your gains.
Yeah. No,
so
like, you sounded confused. That's why I'm like, what's going on, guy?
Look like you about to slap me over the table.
Yeah. Almost for a little bit. But yeah, so it's just one of those things. You know what I mean? Like, if you're going to focus, I would say learn call debit spreads. If you're buying naked calls right now, learn what call debit spreads are. They will change your life. That's how you really make money in these markets. Call debit spreads, aka bull call spreads. Learn that. If you can learn that online and you're already buying call options and trading call options and you're buying short terms, if you do that, It will change your life. Call debit spreads, aka bull call spreads. They're gonna change your life immediately overnight.
Well, and how you made it sounds like very, simple, but there's a lot more that goes into it.
I mean, people are gonna get a lot of cool things from the podcast, but call debit spreads will make you more money than naked calls, unless you are anticipating a massive run. But even then, if you are, then I will go out of the money and do some call debit spreads. You will always make more money with call debit spreads, aka bull call spreads. Always. No questions asked. Hands down. Always going to make it. A lot of people don't know how to do it. Most people don't know how to do it. Most people don't know how to trade options. So,
a lot of the people we see, like, I notice, like, a lot of the people that I see, like, on Instagram, you see ads, like, I'm not the only one, so many people see it, but you'll see them trading, like, futures,
Mm-hmm.
And it's like, I think that's what people, like, only realize, like, that options is. Like, you never see anybody online,
I mean, futures is something totally different.
But I'm saying,
options.
I don't think people, like, get that.
Yeah, like, we'll have a whole other episode on futures.
Yeah, if we
right?
want.
Like, didn't we make, like, $8,500 on futures, or you don't remember that number either?
Yeah, I mean today, like Tony sits here and trades futures, and he has like there's a certain way you do it where you buy in, then you have to reach a threshold. I'm like, dog, what if you just bought in the account and you just fucking put the whole account up first day? And he's like, well, yeah, like I'd be trying to work towards it. I don't want to blow it all. I'm like, fuck that. Like last night, I'm like, dude, like here's my account. Put every single account up, like put all 15 up. Like I don't even care if I lose it, I'll just buy another.
Together. That's what it was all about.
Yeah.
It was a let's save together futures account.
Yeah, like 50-50. I told him like, bro, like I have the gusto and the money to do it, and you have the knowledge. Like let's run it. And I think the threshold was $9,000. What did it make, like 8,500?
Yeah.
Today.
Yeah, like we literally slammed them.
Yeah, like crazy.
We let the 15 contracts fly last night when the Dow was up like 90 points, and we woke up, the Dow was up like 225. So we just slammed out 9Gs real quick. Easy way to pass an evaluation stage. But let's dive straight into earnings because we got a few minutes left. So what are you expecting from earnings, man? Like, what are we going to take these, like we're going to take a few Gs and turn it to 20, 30, 40, 50 Gs in a few weeks?
I think is
that a dream?
At a minimum, what I
you
can
did
say.
It before, I've done it before.
At a minimum, what I can say is
that we're going to make money.
We're going to follow the invest ethics. That's all I'm going to say. And whatever comes out from that, like, I'm just excited to do that.
Yeah,
like,
we got Tesla.
Whatever
we got Tesla
make,
July 23rd. We got Microsoft July 23rd. Chipotle July 24th. Meta July 31st. You got Apple on the 1st. Snapchat on the 1st. Shake Shack on the 1st. Robinhood on the 7th. Nvidia at the end of August.
And these are all projected, but, like, yeah, I mean,
honestly, sign up for the Discord if
it's not up yet.
Yeah. It's not up yet, but you're gonna be able to sign up for the Discord next week, and I would definitely emphasize you try to sign up as immediately as you can because first 25 spots are gonna be free, and then after that,
have it. Yeah.
Like we have to raise some money somehow.
But we're gonna show you all the wins, the losses. We're gonna show you like my dividends, Tony's dividends. What like we're getting paid every month.
Like we're gonna give you everything.
Like, everything.
Give you everything. And I mean, honestly, those earning plays. If you guys do your research and learn about call debit spreads, we're gonna make a ton of cash this next earning season, and we're gonna move within the implied volatility of all these options. So for some of you that do understand what I'm saying, we're gonna make a ton of cash. And if there's anything that we're saying on the podcast that you really don't understand, just go on Investopedia. We're gonna cite everything today. Everything came directly from Investopedia. So this is just an intro to options. Not really too much information, but more information will come out slowly and gradually, and we're gonna make sure that everyone understands what we're talking about, and we're gonna start posting a lot of plays. Shout out to everybody at Yield Max. We're still jumping in the MVDY every week.
The Divvy is living it. Divvy is surviving. The Divvy is living. In my blood.
Divvy, 6-figure Divvy guys, man. That's just what it is, and that's what it's gonna be.
Yeah.
Man. Quick episode out.
Peace.